Lessons learned are always great. They give you an extra layer of skin, which is always good. I think that probably a classic example for, I think everybody would have at some point in their career experienced it, and it's good to learn it the first time, is what I call, or maybe other people call it, being married to your trade. So generally, as an analyst in a fundamental oriented investment structure, that you spend a lot of time on your due diligence process, generating the investment idea. There's a lot of effort that goes into it. And the things change along the way that may not have been true when you started. It's not a static process. The world is very fluid, including all the factors that affect the particular company or investment that you're involved in. And your inability to recognize that, because you become what I termed married to the trade, can be very, very detrimental to yourself, your investors. And being able to recognize that takes a very, very thoughtful person, takes a humble person. And some of those qualities sometimes need to be learned along the way. The latter, sometimes, generally when you have success in this business, confidence turns into ego. So you have to be able to rein that in. And it's just important that you know that it's going to always happen. It's not going to stop. And being able, and that's why, again, bringing it all back to loss avoidance is your number one rule. You always go back to that. And it is very, very classically important to not be married to your trade and to know when to say something's changed or I was wrong, and move on. And revisit it later, see if the valuation has changed, the securities have changed. Let the evolution of what was going to happen, because the change in variable occurred, and you recognize that. So that's probably a very good lesson learned, just knowing that things change. It's okay to have that change and recognize it and move on.